Hey, everybody, welcome back to another edition of Market Talks with Dr. Stocks. This is Dr. Tom Carr, aka Dr. Stocks of drstocks.com. That is drstoxx.com. And if you go to our website and you want to join me and a whole bunch of great traders in our live trading room, where I share everything I'm trading throughout the market day, I give you my entry price, stop price, target price, reasons for the trade, a technical chart, updates on all positions until they're closed, and lots of market comments along the way. Then join me by going to the subscribe menu, scroll down to the live trading room. And if you want to add on our fairly new live options room, which is doing really, really well, you can do that at a 40% discount. All right. We also have daily and weekly stock pick advisory letters, and we've got trading manuals. If you want to have a trading system, you can do that. If you want to learn how to trade, you can go to our webinars and the private coaching service. All right, guys, let's jump over to charts. I'm going to do this quickly because it's already 2:22 on a Tuesday afternoon, October 28th, 2025, and the market is surprisingly strong. I thought we were going to get some back and fill today to close up some gaps and give some testing to support levels, breakout levels, and we haven't done any of that. We started off a little bit on the weak side. It was just a real modest bump up, and it kind of gapped back down again, and then it's just been trend up ever since. I'm a little bit out of the loop on the news cycle today, but I know that it must be good, right? If the market's happy, we don't really need to know what the news is. We just need to know what the market is doing. All right, so here's the S&P 500. You can see that there was a breakout above all-time highs on Friday last week. We gapped up on Monday and we ran all the way up to the close. We gapped up slightly today and really thought we were going to get some back and fill, and we haven't. We are running up here with an hour and a half of trading left all the way up to the highs. Now, bear in mind, we are up here against the top end of the linear regression channel. That's the 2.0 standard deviation. It's called the blue zone. And typically, when you get up to the blue zone, that's where things start to cool off. Doesn't always do that, but look, got up to the blue zone right here and it cooled off. Got up to the blue zone right back here and it cooled off. Got up to the blue zone here and next day it cooled off, right? Now, a cool off doesn't have to mean a pullback. It can mean a sideways base like this one right here. That's very bullish. Or a little more worrisome is the pullback that could look something like that, right? Here's another little 3-bar pullback. And we're setting up that again, and we've got some big things coming down the pike. So tomorrow we get FOMC, the Fed announcement, the Fed presser, and all the questions and all of the JPOW off-the-cuff comments, and then the market reaction following that. That could be a trigger. I don't think it will, but it could be a trigger for some selling pressure. So typically on the JPOW announcement, we get an initial knee-jerk higher. We get some concern during the presser. Things kind of calm down and start to fall a bit, can get a little bit squirrely. And then once he's done talking, things float back up a little bit better toward the close. And then typically the next day we get a nice rally, which is what we've seen in the last 3 or 4 Fed announcements. But that's not a script. It's not written in stone. The market can do whatever it wants. And we've also got on the backstop, we've got the government shutdown, which is it's I don't know how many days now. We've got people that haven't been paid for weeks. That's not so easy to deal with. And we've got uncertainty about the economy because we're supposed to get this week GDP, durable goods, PCE prices, jobless claims. We're getting none of that. So we don't really know where we're at right now. And that's not a bad thing. The market doesn't seem to be caring about that. It just keeps going higher and higher. But sooner or later, we're going to have to pay the piper for that. We've also got some gaps down below. That's never, a much better, stronger, constructive rally is when you get a little bit of a gap down in the morning, and then you get a rally up to the close. You get a gap down the next day and a rally up. That's typically what you see in a good, long-lasting, sustainable bull market. And we've had that in this market itself. But now we're starting to get some real FOMO, right? Fear of missing out. People are jumping on board at the open, even though it's a gap up open, and they're running it all the way up into the close. And that's not really sustainable. So we just have to be a little careful. All right. We're going to see the same thing in the NASDAQ, right? Pretty much the same thing. The Dow has been a little bit weaker, but it is having a good couple of days, just now above all-time highs. And the Russell 2000 is the weakest of the group. Looks like kind of a double top forming. There's probably some bearish divergence up there. Let's see if there is. No, there isn't. Okay. Well, let's see if there's anything working in on the S&P. Yeah, there is a little bit from yesterday, just one. And there is a little bit, that is the money flow index on today's bar. So it doesn't mean that it's topping out here and it's going to go right back down again tomorrow. But you can see every time we did get some divergence on the bearish side, it usually marked a top, a top, a top, a one-day top, right? Okay, so we just have to be a little careful. Just be a little careful. Don't get too greedy. Now, my focus, let me just take a quick look at FinViz, right? Yeah, so here's the reality. The market's going up today in the S&P and the NASDAQ especially because of these guys right here, the big mags, and they've been doing really well the last few days, and they've got earnings. Most of them have earnings coming out tomorrow night and Thursday night, and the market's excited about that. But look at the rest of the market. Red, 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 red. And we saw the same thing yesterday, even though yesterday was a strong day. So we are actually in some good sectors. I've been putting our both rooms into some uranium plays. We're in a copper play. We're starting to nibble on some shiny metal plays. And these are sectors that have really been out of favor and now have hit an equilibrium, starting to see some Fibonacci retracements, et cetera, and they're starting to get a good bid. Money's going way into uranium today. It's been a really hot sector, and there's some great mining plays in that space that are worth hanging on to. I'm long uranium itself. URA is the ticker symbol. Bitcoin looks pretty good. Ether looks pretty good for some follow through, and we're long those in both rooms. And then we do have, I don't know, a handful of other stuff, right? We've got some growth names, some of which are doing okay, some of which are, we're still waiting. But we've seen some really nice pops. We've seen some good pops in stocks like Pony and what was the other one that did really well for us? Anyway, I'm not going to go back into my notes. So, all right. So I want to show you a few things here before I get too carried away, and I really do need to wrap this up quickly. Indexes, as I said, they've been really nice, but we get at that place where we typically cool off a little bit. So let's be careful. And if they cool off, you know what's going to happen? You're going to see the mags. This is what I'm afraid of. If people are plowing into mags this week, it's not going to take a whole lot for earnings to just be a slight miss somewhere down the line, right? It may not be top, may not be bottom, may not be forward guidance, but somewhere in the mix, you're going to see a miss or two, and that probably would be enough to get money flowing out of the mags. And then where's it going to go? Well, I think it's going to go into gold, into miners, into what was the other? Some quantum names. Yeah, the quantum index itself is doing pretty well. And there are some, like I really like Oracle. Right? Oracle is it's not exactly a mag, but it is it's a little bit behind the curve, so it needs to play some catch up. And it's not printing an inverted head and shoulders. I need to get rid of that line there, but it is bouncing nicely off of the rising 50-period moving average and is trying to get back up above the 21. Another one that is nice is Uber. Been seeing some good call flow, and it's bouncing nicely off of the pink zone of the uptrending LRC. You can see the cycle down here, the big long-term cycle, the black has bottomed out and is starting to roll higher. That's where you want to see it. And you'll see that for a lot of other trades that we're going to look at. All right. Now, I want to show you a couple of nifty tricks here. So I'm going to bring over my market surge chart. I better put it in the box there. Hold on. So this is market surge. It's a charting, scanning, screening tool produced by Investors Business Daily, and it has all of the proprietary metrics for Investors Business Daily, their unique earnings metric, their relative strength metric, their accumulation distribution, and they have a bunch of other things. And you can scan for the whole universe of stocks with a very powerful scanner, probably the most robust scanner. You're going to get zero false stocks passing through, and you're going to get problems with just about every other scanner that you use. You're going to get stocks passing through that shouldn't have passed through. Not with this one. It's very robust. And the comp score is your bottom line marker for how strong both the company is on a growth basis, on a moat basis, on a pricing power basis, and on a relative strength price basis. So that's your comp score, it's your bottom line. And all you need to do when you run a scan is just sort by that, and you're going to get the best stocks at the top and the lesser stocks down below. So that's one little tool I want to show you. But let's say I do this scan. Let me do my A-list scan. And here at the top, we've got CLS, NXT, Palantir, Lam Research, Rambus, APH, and Shop. Let's just focus on the top 7. Now, if I go to the comp rating and I toggle that so that the 99s come at the top and everything else kind of falls down below, I get a different set, right? Annette, APH, Avco, Broadcom, Celestica is still there, GE, Palantir is still there, Rambus is still there. All right, well, let's say those 7. I like all 7. I've looked at the charts. I know the companies. I'm familiar with them. Which one is going to be the best? Well, here's a little tip that you will find in Market Surge, and you can find it in FinViz. It's just that it's going to be a little bit trickier to locate that, and you can't sort the way you can with Market Surge. So here's the thing. This little number right here, this is a negative 53% right after the volume. That tells me that today's volume, even though that's a lot of shares, is 53% below average. 53% below average. And this is updated on an hour by hour, maybe even minute by minute basis. I've seen that change more frequently than an hour. So it's updated maybe every 5 minutes. So to date, in terms of where we're at in the market here at 2:30 something in the afternoon, the volume is over 50% below average. Now, that's not necessarily a bad thing, but it does mean that right now the market's not that enamored with Oracle. All right, well, let's see if I can find something a little bit better. So I just go to this tab right here, volume change versus 50-day average, right? And I see red. You know, there's a lot of under average volume out there in all the stocks except maybe a handful of names. Although the uranium plays that we're in right now are well above average. Everybody's going after uranium today. It's a hot space for very good reason. But negative 36, negative 34, negative 26. Okay, it's not standing out. What is standing out? Look at this one. 217% above average for Celestica. And there's another one down here. Rambus is up 302%. Now, Rambus, I think, had earnings. It did. It had earnings last night. Maybe Celestica did too. Let's just take a look. Was that last night? It looks like it was last night. Yeah, that's usually what causes a triple digit above average volume. So now the good thing is that Celestica is up on earnings. That's always good. And huge volume, not going out of the stock, but going into the stock. People are buying it up here at this level. This is probably all-time highs. That's excellent, really excellent. Now, if you have an earnings report and the stock is up, but it's still under average, or maybe just a little trickle above average, you know, move on and find something better. But 217% above average, that is huge. Where'd my Rambus go? I somehow lost my Rambus, but let's see what it looks like here. 300% above average. Yeah, okay, now this is the opposite. This is a good comparison. Out with earnings last night. Looks like an earnings was pretty good, 29% above expectations. But the market isn't happy with it. The market is selling it off today, and it's at 300% average volume. That means people aren't getting in, they're getting out, right? They're running for the exits. They're taking their profits. Rambus is no longer on their list, so they're moving on to something else. So just using that tool, and I know it's a little bit kind of strange because both of these are out with earnings and they're way above average, but just using that tool and the price reaction to earnings, you can see CLS is a buy and Rambus is not. Okay. Now, if we go down this list and we find a few more, let's see if we can find something that isn't doing earnings. Something that I know. There's a lot on this list that I don't know at all. All right, well, let's just look at Qualcomm because we actually we just got out of Qualcomm yesterday when it hit our target at 200, and it came, got all the way up to 200, hit our target, came right back down very nicely, convenient for us. But it was a nice trade in Qualcomm. So we're now flat Qualcomm. That was a longer term trade in the live trading room. But here it is, down a little bit on the day, up almost 200% after, and I don't know what happened. I'm a little bit out of the loop on the news. Qualcomm had some news. I think it was OpenAI stuff, because that seems to be the thing that's propping up all these big mag tech stocks. Anyway, huge up yesterday, well above, way above average volume, and now people are still buying it because the stock hasn't fallen that much, and it's not like it's crashing down below where it was before. But it looks to me like this is a little bit more about distribution than accumulation today, and so I would not be interested in buying Qualcomm here for that reason. Nicely above average, but we want to see the stock price going higher, not going down, right? All right, that's the only tool I wanted to show you, and now let's go back to charts. So I'm going to take a quick look at mags. If I can get there, where are they? There they are. Let's do worst to best. So Qualcomm, as we saw, on well above average volume, is selling off today after a big day yesterday, and there is some bearish divergence working in. So we're not interested in Qualcomm, and I don't know when earnings are coming out, not this week, but next week. Google is the one that reports tomorrow night. It's one of them that reports tomorrow night, and I would not be a buyer here of Google. You can see a lot of bearish divergence up here after a nice breakout high. Nothing wrong with that breakout high. Nothing wrong with the volume coming in yesterday above average, today below average. But it is reversing. It is showing bearish divergence. Likely to see, probably on earnings, likely to see a little bit of some back and fill. You've got a gap down here to 260 and another gap down here to 253, and those would be the targets on any sort of a pullback. Now, of course, on earnings, everything, all bets are off, right? So it doesn't matter if there's bearish divergence there. If earnings are amazing and the company is just pouring out all kinds of new stuff that the market didn't know about, you'll see the stock price go up no matter what. But nevertheless, it's just from a technical perspective, not a buy. All right, Apple, kind of the same thing, right? Up all-time highs. Ooh, how did we switch over there? That's weird. Well, see, it's a technical indicator that it bases itself on whether that is a pivot high. And if this price comes down a little bit below, it's no longer a pivot high. It goes back to the most recent pivot high. I think that's how it works. Anyway, but there was bearish divergence up there briefly. And the medium-term cycles are starting to roll over from highs. It's not exactly what you want to see. And it's got earnings on Thursday this week. So Facebook has been on a good tear out of the pink zone of an uptrending LRC. The long-term trend has been raising higher, but it is out with earnings tomorrow night. Now, this one actually looks pretty good. I mean, compared to those other two, Google and Apple, this looks maybe the best of those three because it has a lot of upside before we start to get into resistance. And we're not at all-time highs, and we're not up in the blue zone of the LRC, and we don't see any bearish divergence there. So technically, this is a clear picture. Let me see. Amazon is having a very good day today. It's got earnings out on Thursday, and this is kind of in the same boat as, in fact, I wouldn't even put the line there. I would put it here as a trend line. Yep, there it is. So this looks good still for some upside technically. You've got the breakout. You've got a hold of the 50. You've got follow through today. on a day when most stocks are red. It's doing okay. There was some news out as well on Amazon this morning about its workforce and something else. And the market likes it and it's up. And you've got the cycles kind of doing what you'd wanted them to do, which is down low, starting to roll higher. So technically, there's some good upside here to 237. And let me do Microsoft, since we're long Microsoft in the other room. And this was up on OpenAI news, which I don't think was actually news, but anyway, they came out and said we have shares of OpenAI, and we still have shares of OpenAI. Market shot the stock up 5%. But you can see it's a gap and crap. So when everything else today is gapping and going, the big tech stocks are, at least. Microsoft is doing the opposite, and that's kind of that's a putting on the brakes, right? If the stock is putting on the brakes, we don't want to jump on board and try to hit the gas pedal, right? We're going to run up against a wall. So I'm not keen on that. Nvidia, we had to trade in Nvidia, and I sold it too early, as I often do. Just as it was getting up here into a level of resistance, I thought, it's probably going to cool off, and then it just boom, right back up. There's some news about China and Trump and something else that is spurring it on today. Now, it's not a buy today, in my opinion. It's a big green stick. Typically, on big green sticks, you get a better price the next day or two. But the good news is volume is increasing. That's good. There's no bearish divergence up there. That's good. We're still not up into the blue zone. That's good. And it is a fresh confirmed breakout to all-time highs. And it's NVIDIA. So, of course, I own long-term shares of NVIDIA, and I think everybody should. Now, I'm just going to go over a few of my greens lists, and then I really need to let you go. All right, so let's see which ones we're in so far. We have a few of these up here. ASPI is one that I almost put my live trading room into this morning. I kind of wish I did. It was down here at 10. It shot all the way up above 11. It's now at 1050. But this is a uranium mining play, pretty sure. And that space is getting lots of volume, lots of price movement after a long pullback, right? You can see this pullback. It was up here at 15, came all the way down below 9, and now it's at 10 and change. This still looks good. We might get in this one before we get into the closing bell. You can see the volume is bigger today than yesterday. You've got the MACD pinch, which is bullish, and you've got the long-term cycle. Looks like it's heading to the lows. It's not quite there yet, but the shorter-term cycles are doing okay. So ASPI looks good. We did go long TECK. This is a rare earth mineral mining play or other metals mining play, and it's just about to break out of a bull flag. That looks good. What else? We have some Oracle calls in the options room, as I mentioned. And what else? We were long open shares in the live trading room. We got in down here, 720 something, I think, and it got all the way up twice to this trend line and hasn't been able to break through. But as long as it stays above that 21 EMA and stays above our stop, we've got a raised profit stop on this, then I do think it's got a very good chance of breaking out before earnings. We don't want to hold over earnings, but before earnings. And then I like the uranium mining plays. I like other metal, rare metal, earth metal mining plays, gold and shiny metal mining plays. And then the last sector that's getting some pretty good interest in call flow, but not seeing it yet, at least not in all the names, in terms of price movement, is the quantum computing segment. Now, I'm in with a different kind of trade. I'm in quantum ETF, which is a exchange traded fund for the quantum computing space. You've got Oracle in there, and you've got some of the bigger guys that have they own the infrastructure and the data centers and the servers that allow quantum computing to take place. But then you've got the little guys that are just pure plays on quantum computing power. They sell to the big guys. That's Rigetti, IonQ, QBTS, and some others. And they've been in pullback mode. So while the entire space has been strong, you can see we're up at all-time highs. And I bought mine down in this little pullback down here around 104, and here it is at 113.50. The space is good, but the pure play names, and I'll show you a couple of others, right? QBTS is kind of, it's starting to bounce off the lows, off the pullback lows, but not getting traction today. IONQ, same thing. That's quite a nasty pullback today. And then RGTI, in my mind, is the best of the space. All right. All right. I better let you go, guys. We've got 15 minutes before the 3 o'clock power hour, and I'll produce a video, put a link in the main rooms, and we'll trade together the last hour. God bless everybody. Have a great rest of the afternoon, and we'll see you back on the trading floor in just a little bit. Bye for now.